Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 23rd, 2013. And in this video, I'd like to do an update to the short trade ideas, the active shorts that are listed on the site. I've spent the last couple weeks getting back into the groove of trading since the holiday season, and in doing so I've been updating the watch list, adding some new trade ideas both on the long and short side, as well as removing any trades that have hit profit targets or been stopped out. So today we're going to focus on the short trades, and in doing this, a lot of these trade ideas go back several months. For those of you who follow the site, recall that we pretty much stated on November 16th that a lot of my key downside profit targets for the primary indices were hit, and so personally I covered a good deal of my short positions, most of my short positions in fact, and took a lot of longs, and at that point wrote a bounce up. And the reason I left a lot of these shorts on as my personal plan, and it was to scale back into these on a bounce, which I have been doing. Regrettably, I started doing so a little early, back in December, and greatly underestimated the scope of this bounce. But that's neither here nor there. Some of the traders on this site may have been longer-term swing traders who held these positions, and the majority of these positions are actually doing well. As the market's gone on to make new highs, at least the S&P and the small caps and mid caps, the Nasdaq is still well off its highs. But as the market has done so, a lot of these positions have lagged, and that shows that these are stocks that I believe have more downside. The charts still look bearish, and for investors who are looking for maybe some new short positions, whether it's to hedge the longs that you have currently or just to play a pure short play on the market, I think you'll find some good ideas here. So let's go ahead and dive into these. First one is ALXN, Alexion Pharmaceuticals. I won't spend a lot of time on the history of these charts. I highly recommend you use the post by ticker symbol on the site. Drop down if you're interested in a symbol, select the symbol there, and you can look at the history and the previous charts on those trades. But this one we shorted up here originally, hit first target, and since then it has bounced. I've given a lot of these trades room, even left some of these trades on that have exceeded what I called suggested stop levels. Now remember, I can only suggest levels or point out levels that might be commensurate with certain target levels. They might fit certain traders, but everybody has different stop parameters and different risk tolerance, trading plans, time frames, etc. So if a pattern still looks good, I'll leave it on. And for the last few weeks in Alexion, I've been following this, what looks like a bear flag pattern under the larger wedge. We shorted here on the breakdown and set up in this bear flag pattern, and just today, intraday, you can see a sharp drop off earlier in the day. There must have been some news there. This is a 1 minute chart. The crosshairs, this is where the stock opened today, so it was trading fine, and then all of a sudden the bottom fell out on a lot of volume. So obviously some news event, doesn't really concern me what it was. The important thing is technically it's broken down from that pattern, and we are below the former first target level. As you see here to the left, there's quite a nice little thin zone to be filled, so I still favor T2 on this trade over time, and I think as of today it offers a new objective entry. Maybe if we get pushed back up to retest that flag pattern from underneath, that might also be another entry. Just take a look real quick at a 2-day period chart, zooming out a little longer term. There was the wedge, the orange or yellow trend lines, and then this blue trend line was a longer term key up trend line, which we're well below now. So overall, this looks like over time this stock is going down to that 69.60 target, which will at this point be my final target on the trade if it gets there. Next trade, I am doing these alphabetically for those of you who are following. I'm looking at the symbol list, and the next active short trade is Amgen. As you can see from the chart, a lot of divergences on this top, double negative divergence. Price is making a higher high against the MACD with a lower low in the RSI, and then again a higher high.
these white lines that I'm highlighting here, this is the bottom of a larger uptrend channel. And the last time I posted, the last update to Amgen was when prices were right here on the bottom of this channel, and I mentioned a break below this trend line would be the next short entry, which we did have just the other day. Looks like about on the 15th or so, prices broke below that level and have impulsively moved down, and so far stopped just shy of this first target at 80.50. If you are in the trade, great. I think it still looks good. Like the previous stock I just mentioned, we have a thin zone here to be filled, and so if you're a longer term trader, swing trader as I am, I prefer the second target T2 at 71.50. Nothing wrong with taking the quick buck if you're a shorter term trader, or partial profits there. But if I were not in this trade already and I like the pattern, I would wait for this 80.50 level to give way. To short the stock here, you'd be shorting right above support, as well as this 200-day moving average, the red line here. So anyways, this one looks good. Next entry would be on a break below 80.50, and there's the current final target at 71.50. That's Amgen. BIIB, another biotech. I may have tweaked this wedge. You'll have to revisit the prior charts. Some of these charts I've added support levels, or might have made an adjustment to a trend line, but either way we have this large rising wedge pattern as defined by the white uptrend lines here. Breakdown, retest, and if I'm not mistaken, the last short entry was up here somewhere on the retest, if I believe. And so this is another trade that's positive, at least from that entry point there, and I've marked these two support levels. This remains the first target. And as I'm noticing this, folks, I'll try to update. Earlier in the year, I used to only list the target levels and leave it up to everybody to replicate on their chart. But I've had a lot of feedback from members of the site or followers suggesting that I put up the actual numbers, and I'll go ahead and do that on Biogen and some of these other ones that I need to. But that looks to be about, just FYI for you trying to calculate, your stops. Call it the 122.50 area. Somewhere right around there, 122.60 be the first target, and I'll update the other ones soon. Let's take a look at the weekly. Here's a weekly chart, and this again is what keeps the bearish scenario well intact for me. I know we've had a heck of a run. I know sentiment is screamingly bullish right now, and the price action is as well. But longer term, the broad markets, as well as a lot of these key stocks, are showing me, rising wedge patterns. Are very extended, far away from any type of base, support area, with negative divergences in place, and we're talking in most cases multi-year divergences. And so this is a clean, large rising wedge pattern. You have the 200-day moving, I should say the 40-week moving average, which is the same as the 200-day moving average. I'll brighten that up a little bit. That is been support on Biogen, and once that level goes, more than likely that will mark a new downtrend for the stock, since that line, as well as this uptrend line, have defined this uptrend in Biogen for, going all the way back to early 2010. BIS, I'm going to skip. This is just the ultra short, leveraged short NASDAQ Biotech. As I often talk about on the site, I use the one-time ETFs usually, or the main index, as far as timing entries and exits, because there are a lot of decay. So I don't really, let's just say it, I don't trust the charts as much on these. This one we did enter on a breakout somewhere above this rising wedge pattern. If you recall, the main tracking vehicle, the IBB, which I'll talk on here in a minute, did hit its first target, and that's where I took all my profits on the biotechs. And this one was about somewhere right around here at the time. But anyways, I'll get to that IBB chart in a minute. But this one is once again looking good. We've come back. It's retesting its old lows. But, well, let's move forward and we'll look at IBB here in a minute when I get to that. We're going through these alphabetically. So the next one here is CBL. As you see, white lines are a rising wedge pattern, and we had a nice breakdown retest. Here's our first target. I believe, if I can't
again, I'm not looking at the notes on each and every one of these trades. I'm trying to go through this video as quick as possible. Our exit was either here or on the retest or both, so that trade either way should be positive right now. Here's our first target, and I've since drawn in this orange support line. So once this support line goes, that will greatly increase the odds of T1 and my preferred target of T2 being hit here. Here's DDS, Dillard's Department Stores. I really like this one. Wedge overthrow as shown here. If you look at these blue lines, large rising wedge pattern with the requisite, or I should say preferred, they're not required, but much preferred on a rising wedge pattern, negative divergences down below. I believe this support level was mentioned before, and that will be the next trigger. After the wedge overthrow, prices have moved back within the wedge, which is what you want to see, and have so far found support at this level here, based on these previous reaction highs. So once this support level goes, that would be your next objective entry, that level. And again, I'll try to update as many of these as possible as static charts on the site. There were just too many to cover. These static charts take a while to mock up, and there were just too many to cover, so I figured the video format, as long as this might turn out to be, is a much more efficient way of doing it. So 79.35, call it to be safe. I do see some reaction points there. Let's say best to wait under 78.50. That will be your next trigger, and then your target zone. I have a target zone here that runs from $72 down to $70.50. So that would provide a nice short even to the first target. And my second and preferred longer term swing target is 61.10. Okay, this is DLTR, Dollar Tree, and this one was entered on a break of this long-term uptrend line. Let's take a look at that one. That one goes back. Gosh, there it is on a weekly view. Beautiful looking chart from a bearish perspective on the weekly chart, and coming back to the daily. This one was an entry here, not on this spike, but I added it after, and so the breakdown was right here. So this one we're well up. I think the first target was about a 15.5% gain when we hit that shortly after the entry. Here's a downtrend line I put. Not the end of the world if it gets above that. If you're swing trading this one, as I am, I would just give it a little room. Based on your entry price, of course, and now, if you're not already short the stock and would like to join the party, hopefully this one does work out. Not to get too overconfident. A nice pushback to maybe the intersecting first target level and this downtrend line. Or I'll be honest with you, it's so close now you could begin to scale in here and then just have your stop probably somewhere not too far above that recent reaction high. Plus, there's a nice gap here, so. In fact, this is a good level for anyone that shorted it at the original entry and wants to protect profits. I'd say a move over, give it a little room above that. Say over the $43 area would be your stop, and over time, these are my preferred targets. At least T2. Can't tell you if I prefer T3 over T2 right now. I'll have to just wait and see how things work out in the market here. This is FCH, nothing exciting on this one. We had this rising wedge pattern we shorted the breakdown on. Gave us one fake down move here and then the real deal right here. Prices came back up and made a perfect retest. I marked that as the resistance level. Prices have now moved back again to that resistance level. So we have this 1, 2, we have these reactions over here. So anybody long this position, I'm not crazy about the pattern at this point. Typically, we did come down and hit or within pennies of the first target. But the fact that it's already moved back up all the way to that resistance level again, I'm not sure if I would recommend or suggest a new short entry here. If you did, you could short it right at 523 and have a stop just on the other side of that. And if you're still in this trade, if you were swinging, holding down for the second target, I would set your stops not too far above these recent reaction highs here when it came back to make that retest. That was, we'll call it Again, depends on your entry, folks, but nothing over 550. I wouldn't let that one get much above that as far as stops go. So keep an eye. Might reverse down here. Um, can't take too much else from the chart. Not crazy about the trade, but I just wanted to update it for those still in it since we still haven't taken out this level yet.